This episode of Life Accelerated is brought to you by Equisoft, a leading global provider of end-to-end cloud-based solutions with deep domain expertise in the life insurance industry. To learn more, visit equisoft.com.
Don't fear the future. Lean into it, embrace it. It will change the way we write and underwrite business in the future. It could tremendously change the customer experience and the efficiency within the things that we do.
I'm Olivier LaFontaine, and this is Life Accelerated, a podcast for life insurers who want to achieve digital transformation. When we think about the life insurance industry, underwriting and risk management are at the center of some of the most important advances happening today. In this episode, we're joined by Andrew Kramer, an industry veteran with decades of experience in underwriting, risk management, and life insurance distribution. Andrew's journey spans both reinsurance and chief underwriting roles, giving him a unique perspective on how the industry is evolving. We'll discuss the challenges of underwriting and how M Financial is reshaping the insurance market, and particularly in the high net worth segment. We'll talk about the groundbreaking work being done to streamline the application and new business processes by working and improving standards to reduce duplicate work. So let's get into it. Hi, Andy. Welcome to the show. I hope you're doing good.
I am doing well. Thank you very much. Glad to be here.
What I like to do on the show is start a little bit off topic to get warmed up and maybe start with a bit of a personal note. And I'm told that you've recently traveled to Japan. So you want to kick us off by talking a little bit on how that was, and did you enjoy it?
Sure. Yeah. My wife's goal was to run all 6 world major marathons. She ran Tokyo a couple weeks ago. So I joined her, obviously. We did a 2-week vacation and really enjoyed ourselves. Did a lot of sightseeing after the race.
Good culture shock also, I'm sure, at the same time, while a very modern country, rather different than the U.S., obviously. So did you enjoy that?
Yes, it was. The culture was tremendous. Totally different than I had expected. I mean, it's clearly a very populated country, but people are all very respectful of their own personal space and things like that. So I really did enjoy that. You would get on a subway and it'd be perfectly quiet. You'd get on in an elevator and it would be perfectly quiet. Nobody was interrupting. In the time we were there for 2 weeks, we only heard 2 sirens, a fire truck and an ambulance. We didn't hear all the car honking and stuff like that. It was quite a different experience than, from traveling to New York City and other major metro areas in the U.S.
And I've never been myself, but we have done business with a partner that used one of our tools in the past. And so we had interactions with the team over there. And it's always very polite, very respectful. There was a lot of Olivier-san and Jose-san when exchanging with them. So really interesting approach to doing business. Anyhow, with that, we can move on to the thick of things. First of all, I'd like to hear a bit of your background. You've done many things in your career in different roles around underwriting and risk management. So you want to talk a little bit about your path to where you are today and what the role is?
Yeah, it did meander. Early in my career, I started as a life reinsurance underwriter for 7 or 8 years, then moved into a direct underwriting role with a carrier. Went back into reinsurance. A company that I was with in the early 2000s got out of the business, and I could see storm clouds on the horizon in the life reinsurance marketplace back then. And if you think back then, there weren't many reinsurers that survived. There was a lot of aggregation, and a lot of outside European reinsurers came in and purchased those reinsurers, the U.S. reinsurers. So at that point, I could see it was going to get very challenging. So I used the skills that I had developed and landed a role in other parts of financial services. I went to Bank of America in their insurance services operation and became the risk executive of the insurance services operation. I did that in that particular entity. By the time I left, it did about $1.1 billion of net income from its insurance operations. We had lender-placed property. We had personal lines that we manufactured and offered ourselves. We had debt cancellation, which was an addendum to a loan agreement that functions like insurance. And then we sold other people's insurance. So it was just a fascinating experience. I used that opportunity to get more into the risk management side of the business. I work for an asset management company, But then I decided I wanted to get closer to the actual business. Instead of into a staff function, I wanted to get into a line function. So I got back into underwriting, and I went to New York Life in their direct-to-consumer operation and did that for 3 years. And then I moved to M Financial, where I've been working in the high net worth and ultra high net worth financial planning space. So it's been kind of a whirlwind. I've done a lot of different things, but everything seemed to have built upon each other, which was kind of fun.
And this is great, a very unique background. So can't wait to hear some of your insights around the industry, and in particular around underwriting and the life insurance industry. But before we go there, can you give us a little bit of background on M Financial? Because I think the company has a very unique business model, which I think you speak about very interestingly. So you want to go through that a little bit and give us some background on what the company does?
Sure. M Financial is a life insurance distributor. We focus on the high net worth and ultra high net worth. We represent 6 or 7 companies. We are comprised of 140 independent agencies, if you will. Some are large, some are small. Some might be 1 or 2 producers and 3 or 4 back office staff, but some might be hundreds of people. So it really does vary. We're located across the country. M is actually owned by our distributors. We were created by a very innovative and thoughtful group of them that founded the company. And now we're across the country. We are unique in that we share in the risk with our carriers. We created our own reinsurance company. So we take a piece of every risk we write. Because we have a reinsurance company, we know the mortality and the persistency. And our compensation program with our producers is essentially our dividend from our reinsurance company. So if they write bad business, it will affect their dividend. So we write really good business, and the business sticks around. It's got really good persistency. And because of that, we partner with some of the best carriers in the industry. They create proprietary products for us. We take half of the risk, and it's a win-win-win all the way around.
So you said this in our preparation. I asked the question, why do you not do the life or the policy administration part of it? And your answer to that was that it's because it requires a lot of the regulations or regulatory compliance and things like that. And I thought, oh, that's so interesting, because you're doing almost everything that's necessary in the business, taking the risk, evaluating the risk, selling, working with agencies, but you don't have to deal with the regulators. So I thought that was very smart and a good way to be doing business in the industry.
Well, it was the same thing we realized in the banking world when I was in the banking side of the business. If you are selling or reinsuring the business, you're really only regulated by one essential regulator. If you're a carrier, you're regulated by all 50 state departments of insurance. So it's a much more complex regulatory environment than it is if you're playing in a reinsurance role or in a sales role. So you don't need the heavy compliance infrastructure that you would as a carrier.
Yeah. Oh, that makes a lot of sense. Okay, so back to your current role and, some of the things that you're working on or have worked on recently. So I think we talked about the ACORD standard life application, for example. You want to talk about that a little bit? And I think you're very passionate about that project. So why don't you go through that a little bit?
Yeah, I'll kind of give you the background and how I was introduced to ACORD. Back at that time in 2020, when I first came to M, my boss was actually on the board of directors at ACORD, and he came from the P&C side of the business. And in the P&C world, both in London market and the international P&C, they've really adopted the ACORD standards. And almost every communication they send between companies or between parties within the vertical hierarchy of the organizations, from carriers to reinsurers, it's all prescribed and standardized with the ACORD standards. They get great efficiency. If you buy a home or an auto policy, chances are you're using an ACORD application, and they've standardized a lot of the communications between every step of the food chain in the P&C world. In the life world, we haven't adopted that. And I saw great inefficiency. So my boss at that time, back in 2020, said, talk to these folks at ACORD and see how we can drive adoption to gain efficiency within the life insurance value chain. So I quickly realized there were 2 gaps that I saw that they could help us out with. One of them was the standard application. If you buy home or auto coverage, chances are you're using the ACORD standard application. And the advantage of that is it becomes a very clean user experience and very homogeneous. And carriers can then focus on competing on other things other than their customer experience. And as a distributor or producer, it becomes easier to sell many other carriers' products. Now, You could argue that it makes it more of a commodity, but I view it as spend your money and focus on driving greater value to the customer rather than trying to create customer experiences that may be more expensive. But anyway, to make a long story short, I realized pandemic created a push towards accelerated underwriting across the industry. A lot of carriers had it, but a lot of them had it in pilot mode or they didn't have it completely resourced. But once the pandemic hit, it became very critical to have an accelerated underwriting program, because if you think back to the depths of the pandemic in mid-2020, when there were all the quarantines and stuff like that, you couldn't get examiners to go out to do exams. So the only way you could write business was non-med, which was accelerated underwriting. And my thought was, let's standardize this so that we can have a cleaner data exchange across every member of the food chain within the life insurance industry. So we really started working on the standard application at that time. And we also realized that there was, if you think back to that time period, it was very difficult to get medical records, attending physician statements. And the reason that it was is because if you think about every doctor's office, they couldn't get in to do their job because many people were sick. But in addition, anybody that was in a back office role was kind of pushed to the front office to serve patients and manage the front office staff and stuff like that. They didn't have the resources to actually send somebody back to the photocopier to copy the medical records. Electronic health records went from pilot to full-blown implementation overnight, which is unheard of in this industry. Otherwise, we'd still be probably sitting here and every carrier would still be in pilot mode with electronic health records, but now they've really adopted them. So it forced the adoption of electronic health records. And at that point, we quickly embraced it. And I realized when you order electronic health records, you can access not only the PDF that the underwriters would read, but you could actually access the XML or the JSON code. And I started looking at that, and I talked to some friends in the industry that were knowledgeable in that area, and they said, yeah, that's the healthcare data standards. And as we started digging into it, we realized that those healthcare data standards were really robust. They weren't created for underwriting. They were created for the needs of the medical care and medical reimbursement or insurance industry, the healthcare insurance industry. So there's a lot of extraneous information in those files and a lot of redundancy that life underwriters don't need. So we spun up that project to try to narrow down the redundancy in those records and drive more value-added data that could be processed more efficiently at the point of sale to get to potentially point of sale issue by using medical records. So those pieces are all starting to come into place right now. Where we stand right now, let's go back to the life application. It's a project that we've worked on for probably 2.5 years, and we pulled in the Interstate Insurance Compact, and they were along the whole way. They endorsed it from day one, and they really helped us drive it to the point now where it's actually approved by the Interstate Insurance Compact. And they're the primary regulator for the life insurance industry in, I think, 47 of the 50 states and 48 jurisdictions with Puerto Rico.
One thing that I'm curious about, and I was holding up, something was burning my lips. How do you manage the fact that there's differences in the way that different insurance companies will ask questions like tobacco, for example, or there's some medical questions that are obviously different from one insurance company, which is what to some degree they consider their proprietary sauce, or at least it's the opposite of the commodity, or you mentioned that they don't want it to become a commodity. So those are the types of questions you need to have. So how did you deal with that in the application?
We did receive some resistance from a number of carriers. One carrier told me that they felt their application was a competitive advantage, and I had to chuckle because what I've observed when I lay out in the last 5 years, most of the carriers, at least the carriers that we deal with, revise their applications and their exams. They all look the same. It's 90% or more consistent across everybody. So, how many ways are there to ask, do you smoke? And when was the last time you smoked? Or do you have coronary artery disease? Have you had a heart attack? And then the reflexive questions. When we laid all of these things out, there were more similarities than differences. And we tried to adopt the key innovative approaches of the cutting edge applications, the ones that were most recently adopted. If you think about what's happened with the format of the life insurance application over the last 10 years, the questions used to be very broad and please provide details below. So they would ask, do you have or have you had any of these following things? Coronary artery disease, heart attack, congestive heart failure, the laundry list. If yes, provide details below. And that was it. And then all of those details were in a text format, which is very difficult to use technology to interpret. Where everybody has essentially gone is, have you had any one of the following? And it was a bullet list of coronary artery disease, congestive heart failure, valvular heart problems, heart attack, etc. And then if yes, provide details below. But you would actually have an affirmative check mark by each of those items. And then the details were your typical date of onset, treatment, and doctor's name. So that's what we've done. There are a couple of other things that we added, a couple of other layers in certain impairments, like with diabetes. If you have diabetes, then the question is what type of diabetes, type 1, type 2, or glucose intolerance, and then what's the degree of control and stuff like that. But yeah, we defined all of that and the reflexive questions for all of those application questions. And we also then defined and got approved all of the hazardous avocation questionnaires. Historically, carriers really only approved their aviation questionnaire and their scuba diving questionnaire. But we did rock climbing, backcountry skiing, hang gliding, ballooning. We did all of the hazardous avocations from all of the underwriting manuals that we had access to. So it's a really robust set of forms if carriers want to adopt it. And we have them approved by the Interstate Insurance Compact. What's different now, this isn't the first time we as an industry have tried a standard application. In 2004, I think they created one, and it was paper-based. The challenge is there was no flexibility. It was take it or leave it. And we've addressed that flexibility because the second thing that was a challenge was we didn't have one regulator. We had all 50 state departments of insurance plus DC and Puerto Rico. Now we have the Interstate Insurance Compact. In the past, if we got the application completed, every compliance department of every insurance company said that'll never work. So that people didn't even try. Nobody adopted it. What's different now is we involve the Interstate Insurance Compact, and they are now the form approval and policy approval entity for 47 states plus Puerto Rico, I think. So we've got their approval, so that eliminates that friction. And we also enabled carriers to deviate from that standard. For example, we created more of that superset of questions. And if you don't want to use a question, you can strike through it when you file your form and you don't have to use it. Then you can just reformat your form, show them what the final layout will be of that physical rendering. Most of the carriers are building an electronic application first. And that's what the strategy we took. It's an electronic first submission. Each question will probably be on its own screen to walk through, or a couple questions per screen with all the reflexive questions. We feel with this approach, it's going to be much easier for carriers to only use the questions they need. They can strike through the ones they don't. And we created optionality in things like the nicotine question, the smoking question. Some people say, do you use nicotine in any form? Others say, do you just smoke cigarettes or variations thereof? And then there's a different look back period, 12 months, 24 months, 36 months, or have you ever smoked? So we've provided all that optionality. We've put brackets around the sections that people don't need to use. They can just strike through the stuff that they don't want to use the stuff they do want to use, and give them all the flexibility that we can. The only caveat is you can't add any new questions that aren't approved. But what we're asking people to do is take a look at this application. If you are interested in adopting it, we'll give you a lead role in the governance process to update the application, and we'll get new questions added that people want to use. But what we're trying to do is drive for more standardization so that it's easier to send the data to everybody in the life insurance food chain, from distributor to carrier to reinsurers. And if you can get all that in a standard format, it makes it much easier for everybody to analyze. Because what's going to differentiate the winners and the losers is their ability to analyze the data that they have. We haven't implemented that yet because we've only got the Interstate Insurance Compact approval last November. So we at M haven't implemented anything. We have to work with our carriers if we want to implement all of those. And we're starting those conversations now. If you talk to any of the major distributors, they all see this as a huge win, because when you have multiple different formats of applications, there are very subtle differences that are easy to trip up a producer. And when you miss a question on an application, let's say your replacement question's on the left-hand side of the page instead of the right-hand side of the page, and you forget to fill it out, it becomes a NIGO, not in good order. And that application then gets delayed in underwriting, and you got to get it resolved before the application can proceed. So we think that the early adopters, we feel, will have an advantage, at least in the independent distributor marketplace. you've got a career or distribution system, there's probably not the upside that you would have in the independent distribution system.
And I guess if you combine that with the other project, the electronic health record proposal, or I guess the electronic health record system, then I guess you could probably accelerate quite a bit the underwriting process with those two things combined, because less NIGO, less errors in the application combined with less time waiting from documentation from doctors in other places, you probably can shave off quite a few days to the typical, 50 days it is nowadays for underwriting, right?
That's our hope. And the electronic health records data standards don't just apply to electronic health records. When you order like a health information exchange document or an electronic medical record, it'd be great if we could get it right from the vendor in the ACORD format, dedupe it, remove all the redundancy, et cetera, all the data that an underwriter doesn't really care about. But the other use case for it would be for the medical record summary services that a lot of carriers use. If those medical record summary services could take the PDF medical records and then summarize them and create an extract in that format, now you could feed the data directly into your underwriting system, triage all the cases, approve all the easy ones, decline all the obvious declines that are tripped, and then reduce that subset of cases that your underwriters have to look at. That's what we're trying to do. We've defined the data standards for the top 200 medical conditions. So, for example, there's probably hundreds of potential cardiac issues, but we've probably got 30 or 40 of them that we've defined. And then for everything else, you just put other cardiac condition undefined and route those out to the underwriters because they're low frequency and potential high severity. We should be able to get huge efficiencies in the underwriting space immediately. And then over time, we'll continue to build out those data standards for the next 200 medical conditions. And that's where we are right now. If we can get people to adopt this, then we'll bring people back and scope out Gen 2. Right now, it's just Gen 1 with the top 200 medical conditions.
And have you been able to deploy that, or what's the status of that project at this point?
Well, right now, we had our kickoff meeting last week, actually, with all of the people that were active and engaged in the project. We started with the project. We opened it up to whomever wanted to participate, whether they're ACORD members or not. We did what I would call the technical definitions from an underwriting perspective over 2 to 3 years to get the final data structure, which were basically all the top 200 medical conditions and the risk factors for them. So, for example, to define those risk factors, we looked at all the underwriting manuals that were out in the market, all the reinsurance manuals that everybody had access to, and we had members from each of those reinsurance organizations on the team. And we defined that superset of risk factors that pretty much everybody uses when they're looking at a medical condition. So, for example, if you've got somebody with diabetes, to evaluate that case, the underwriter wants to know, how old are you now? How long have you had it? So what was your age of onset? And then what is the degree of control, which is measured by your blood glucose or your hemoglobin A1C, for example. And then do you have any complications, kidney problems, retinopathy, peripheral vascular disease, coronary artery disease, et cetera? Pretty much everybody looks at those same things. So we just defined all of those in a JSON format. So now if you can either take that JSON or XML file that you get from the electronic health records vendors and either have them, or if you've got a team to extract the information that really matters in that format, it should be able to feed directly into your underwriting system to be able to triage some of those cases. Now, the interesting thing is that I do agree with this wholeheartedly. One of the guys on the team was a medical doctor, and he used to say, your structured data provides the verbs and nouns, but the textual data provides the adjectives and adverbs. And I do believe that. But with those nouns and verbs, you can identify your knockouts and either decline cases or potentially put them on a fast track to approve. But on the complex cases, you need the adjectives and adverbs to get the whole story because underwriters like the story of the case.
Right. And I think that's something that comes back once in a while, but the underwriter job and I guess analysis is going to remain. But what we're really trying to do is sort of filter out the things that are easy or can be jet underwritten or maybe sent to a junior underwriting queue. And so that we can route the more complicated cases to the more senior folks. So I think that's amazing. And yeah, I have to imagine that coming up with standards and trying to lead the way in terms of as an industry initiative, that's always long and complicated. So kudos for trying to make that happen and make the industry better. You said M Financial will negotiate products, or I guess get the design products specifically for M Financial with the carriers. So I assume that standard application is part of that discussion, right? You're doing it on your application so that you get some level of standardization for your agents.
We had our kickoff meeting last week or 2 weeks ago with everybody that worked on the project. So we defined the medical conditions and risk factors for the top 200. Then ACORD took that information and they drafted the data dictionary and deduplicated it and standardized it all and wrote it out, and you find all the JSON code from there. And I was very pleasantly surprised at how much interest there was. We created a separate membership with ACORD for the data vendors and some of the technology vendors that really don't have the need to the forms and everything else. It's just the electronic health record piece. Created a skinny down ACORD membership so they can access all those data standards, because I think that's going to be key to adoption. Because I think a lot of the vendors, whether it be the data providers, the APS summary services, and the technology vendors supporting the processes, realize standardization is the only way to go. It's going to drop the price significantly and the cost of implementing everything. So if we can get them to really embrace and endorse this and basically create, I guess you could say, a plug and play version with these standards, it's going to drop the implementation cost for the carriers significantly.
For sure. And as a system vendor, obviously, we really have a vested interest in seeing that happen, because that just makes the overall process easier and better. We can take advantage of those standards, automate certain tasks in the system. So looking forward to that. I can't help but to think about, when you describe health record summary services and things like that, and analyzing documents and lots of information where only a little bit of information is necessary to make a decision. So there has to be a play for a generative AI in that. I'm sure you must have thought about that a little bit. And so what are your thoughts on that and where that could play in the future to support the process?
I think that's going to be the game changer in the coming years. And I think the horizon is much shorter than we all think. Because if you think about the change that occurs in the life insurance world, it usually takes a very long time. But I think generative AI is one of these things that's going to go like lightning in the next couple of years. We've done a pilot at M to see if we could indeed extract the ACORD electronic health record data standards out of the structured data. And our proof of concept, we just did 2 medical conditions, diabetes and coronary artery disease. It was amazing how much of that data we could extract out. And we only did it 1 week for diabetes and 1 week for coronary artery disease in one iteration. We didn't do any multiple iterations. It was just a proof of concept, and it was extremely powerful. We also then used that to try to summarize the case, and it was very effective. So I do think generative AI is going to be probably the key enabler to drive all of this stuff. I'm having a lot of conversations with folks active in that market, and they're all in agreement that, yeah, we can do that. That's pretty straightforward.
Yeah, and then that improves the speed of underwriting again and reduces errors also probably. Do you see any impact on that, sort of changing the line perhaps as to what is high net worth versus maybe affluent mass market or whatever you would call it? Because now we could perhaps do this faster. We could perhaps do broader analysis at a lower cost. So does that provide more cost-effective products to the lower end of the market in your mind, or that's not really a thing?
Yes. If I kind of look in my crystal ball, and I'm not as close as my counterparts in carriers that are actually making these decisions, but I could see a day when cases are triaged by the technology and the key medical conditions are flagged and listed. And then those that can be resolved by the decision engines are resolved. Like if somebody says they have hypercholesterolemia and they can extract the cholesterol and the cholesterol HDL and the ratio, and they can resolve it and say no issues, move on to the next one. But then all of those medical conditions they can't resolve get kicked out to an underwriter. I think it's going to change the way an underwriter looks at a case. If you think back to the traditional way an underwriter looks at a case, they like to read the APS or the medical history like you would read an encyclopedia from A to Z and understand the story. What's the story? What's the evolution of this patient or this customer's medical history? And that's very labor intensive, right? Particularly if you've got a 350 or heck, even 1,000-page set of medical records. That's very labor intensive. It can take a seasoned underwriter 2 hours to 4 hours to get through the whole thing. That's not an effective use of people's time. Where I think these technologies are going with the APS summary services and the new tools that they're developing, the system is going to do the initial triage identify and resolve the issues that it can resolve, and then kick out to the underwriter those medical conditions that are left to be resolved, that somebody's got to look at, and they'll probably flag the pages that they need to read or the snippets that they need to read to really assess the risk. And then all they have to do is resolve each of those issues and prove the case. That's where I see it going. Now, what has to happen to get there? Well, number one, management needs to enable that to happen, because the first time you tell an underwriter, we only want you to resolve the things that we flag for you, but then you ding an underwriter for missing something that wasn't flagged, then you've got a problem. So I think the technology really has to evolve so we feel confident we're not missing anything, but then you also then have to have management that's willing to provide the guardrails and the air cover for the underwriters. So I think there's a lot of cultural change that has to occur before we do that. Give you a funny story. We were experimenting with one of the APS summary services, and it was a 350-page set of medical records, and we sent them to get summarized. And the summary, unfortunately, was like 1,000 pages, and that's because it created additional summary pages plus all the cross-links and stuff like that. It was just a very dense piece of work. But if you looked at the outline and you clicked on only the things you needed to read, you could get through it pretty quickly. But we sent the 1,000-page summary to the underwriter and didn't explain how to do it, and the underwriter felt compelled to read all 1,000 pages. So it was, instead of a time saver, it took 3 times as long. So we do have to be thoughtful in how we implement this and provide the underwriters with clear instructions and air cover if they operate within those instructions. That's going to be, I think, the biggest challenge, build confidence in that whole process.
Because I think that's one of the challenges in this modern age of a lot of data available for any process, but then sifting through that data can be very time consuming, and it can be a net negative in the underwriter in this case, but almost any job can be overwhelmed with data. So that's where I think AI can help a little bit with that. But if we switch over to the sales side or the advice side of the business, I've heard you talk about the ability perhaps to predict which informal, in your world, right? You do a lot of informal cases because those are high net worth cases, and so they're expensive and people want to shop around a little bit to see who's going to have the better rates. So you talked about perhaps AI could help with that also a little bit. So do you want to explore that a little bit?
Yeah, that's something that we've been kicking around, because unlike a carrier, where a carrier is a little bit constrained by some of the state laws around use of AI and decision assistance, we're not actually making an offer as a distributor. All we're trying to do is predict which carrier is going to be the most effective carrier in the underwriting. My view is I want to avoid sending a case to a carrier if the carrier is not going to be in the running, or they don't have a product fit, their underwriting isn't as good. I would rather only send it to the 2 or 3 carriers that are the most effective at underwriting that particular type of case. So yeah, we did an AI pilot where we tried to predict the carrier's offers, and we had, in just Gen 1, we predicted 25% and 29% accuracy of the 2 carriers that we piloted. The challenge is you need hundreds of thousands of data points to effectively build the models to predict accurately. We don't do that volume at M Financial. So at that point, we proved that it can be done, and we're not constrained by the regulatory environment like a carrier would be. So I think some of those new tools and the modeling is extremely effective, but you just need a lot of data to drive it. That's where I hope to go to help reduce the cost of underwriting across the entire value chain, so that companies like M that do low volume but high premium, we can be more effective and lower the expense burden on our partner carriers.
By submitting less applications that are unlikely to be accepted, right? And perhaps Gen AI can help there as well to sort of read. We've done here at Equisoft a POC on reading through the underwriting guidelines that the carriers produce. So that could perhaps be another area where if you combine that with your machine learning that you do with the actual decisions, then perhaps eventually we get to a place where the prediction level gets a little higher up, closer to that 80 to 90%. Who knows, right?
We're experimenting with the AI tools. We've created a field underwriting guide to guide our producers so that they don't illustrate everybody preferred best. We would rather have them really give an accurate estimate to the client to set expectations. So they don't have to go back and resell it later when they get an adverse action. But I want to use AI as the user interface, or as the front end of that, so it makes it more efficient for the producer or the back office staff assisting the producer to get to the information they need through an AI interface. And it's an incredible tool for that.
Yeah, no, that's so exciting. That's all great stuff, and really looking forward to see what comes out of and financial and other businesses looking at how to model risk and reduce the inefficiencies in the life insurance process. So this was a great discussion. Thanks for your time, Andy. And I think we can wrap it up for today. Unless you have final words that you'd like to say or comment on?
I guess the final words would be don't fear the future. Lean into it, embrace it. It will change the way we write and underwrite business in the future. It could tremendously change the customer experience and the efficiency within the things that we do.
100% agreed. Yes. Thank you very much for your time again, and this was a pleasure.
Thank you, Olivier. Take care.
Andrew gave us a look into the complex world of underwriting, risk management, and how digital advancements are reshaping the life insurance industry. One key takeaway from today's discussion is Andrew's focus on improving data accuracy and streamlining the underwriting process to ensure better risk management while avoiding costly regulatory headaches. M Financial's involvement with ACORD shows how embracing technology and data standards can benefit insurers, their clients, and the industry in general. To find out more about advancing your own digital transformation, check out equisoft.com/lifeaccelerated.